Hey investors, today I'm bringing you a juicy stock, and that is called OEG Group, Orbital Energy Group, a fantastic renewable energy company and asset managing company that is aiming to bring renewable energy to the fore across the whole of the United States. And with sentiment in the world right now and sentiment across the United States gearing towards the renewable energy sector, this is a company to get in early and make some serious profit out of, and feel good about yourself as well. I'll see you on the flip side, and let's have a good look at this company. Catch you there. Hey again guys, welcome into the video. So here we are on the landing page for Orbital Energy Group, ticker OEG. Current share price approximately $3.92, although that might change a little bit due to some news that I will share with you a little bit later. And the price has ticked up from around $2 up to a peak of $4.44 on the 12th of January, as people are starting to get behind this company now, especially with Joe Biden taking up office. Market cap is currently $178 million. But that is small fry into where this company could be in the near future. So the company is a gas system, power service and solar service company, enhancing 30 years of experience in the design, installation and commissioning of industrial gas sampling. They've ran power services for 50 years, and in the solar sector they've recently came on board with that as well, and are leading the way in many respects to how far this company can go. So in the world of energy solutions, you've got the solar EPC side of things. So they have site permitting, site preparation, construction, testing and commissioning, and then the maintenance of solar panels. With electrical power, they've got the design, construction and transmission of electronics and substation infrastructure, and then obviously take a revenue from maintaining that as well. And then in terms of gas measurement, there's a whole plethora of gas solutions that this company offers right here, from cyber security through metering systems right the way up to VE sample systems as well. Then let's get into the PowerPoint presentation and see exactly what this company is all about. Dated November 2020. If you managed to get in and you found this company around that point, kudos to you. That would have been an absolute bargain buy, especially after the election result. So the company is all about creating a diversified infrastructure services platform across its electronic power, telecommunications and natural gas, solar power and existing technologies to deploy a broader set of service offerings. The company to focus 100% on infrastructure services with commitment to reduce its carbon footprint as much as it can. So transformation milestones of the company so far: it's sold electronical mechanical operations. Jim O'Neill, a seasoned industry CEO, joined the company, and it sold domestic power operations. It launched Orbital Power Services, providing electric transmission and distribution services in Q1 2020, and in Q2 2020 it acquired Reach Construction Group, a minority-owned premier provider of engineering, procurement and construction services to utility-scale solar operators and customers, and completed its name change to what we know it as now, which is OEG Group. So the company has a couple of different sectors, as I've already mentioned. We've got solar services there on the left, Orbital Power Services in the middle, and Orbital Gas on the right, an industry leader in gas systems. It also has industry leading solar construction, so it specialises in building solar energy fields, providing strategic benefit to its customers. Orbital Power was a Dallas-owned, wholly owned subsidiary, launched in Q1 2020, and it has numerous operations going forward to bring power to its customers. In the gas sector, it's hoping to leverage technologies into the integration service opportunities and see 20 to 30% revenue growth from 2020 and building into 2021. That is phenomenal double-digit growth and should only do better than that. So utilities and wireless operators are making more substantial infrastructure investments in solar, electric, renewable gas and natural gas. This company provides all four of those solutions, so guess what? It's going to benefit massively. So there's grid modernisation in play at the moment over in the United States, where there's different stages for the sector at the moment. You've got the legislative, which is blue, regulatory, which is yellow, and legislative and regulatory in yellow and green. So we're all waiting on approval, various approvals basically, to get involved and renew this key important infrastructure. And then we're moving on to biogas and biomethane. So the consumption and outlook for consumption here in 2018 was just 2 or 34, and then we've got by 2030 192, and then by 2040 324 metric tons. So that's a substantial increase that we can see there. Solar installation is also increasing massively through residential, non-residential and utility. So the sort of amount of infrastructure that this company can sell and put out on the ground hopefully will only go up as we get even more environmentally conscious. The company obviously has a commitment to reducing its carbon emissions. It can't be installing solar panels and doing renewable gas when it's got a massive carbon footprint itself, so it's looking to smash that down, keep that as low as possible. And then forward thinking, it's got a few key objectives there through 2020 and into where we are now, 2021, to drive organic growth, compete in new targeted environmental initiatives, leverage these and take social responsibility in everything that it does. So really good key strategic goals set by the CEO there. So when they target acquisitions, they're going after renewable energy companies and successful ones at that, and evaluate different targets. So there's platform acquisitions, which are electric power, renewable gas and solar, or renewable wind, for example. And then tuck-in acquisitions, rapidly build scale, increase geographic footprint and expand existing capabilities. The acquisition criteria is quite specific by the look of it, so you've got 8 options there that it needs to be for OEG to consider taking it on. So you've got good outlook for growth, revenue visibility, a strong backlog, growth constrained by their balance sheet, just to name a few. And a summary of financial highlights you can see there. So in the 3 months ended September the 30th in 2020, they made $130 million in revenue versus $61 million in 2019. And then over the 9 months ended in September 30th, it was 270 million versus 170 million last year. So the company and its revenue are growing nicely, and that's exactly what we want to see as investors. So the company has some great long-term goals. The 3-year financial targets are a 20% revenue compound annual growth rate, a 10% EBITDA focusing on profits, EPS growth and revenue growth, ROIC growth of plus 12% and sustainable cash flow. In highlights you can see there that there's 5 key steps for investors to look at in this presentation. That brings us nicely to the end of the presentation there. So there we have it there, guys. That is a huge company, massive potential in the renewable energy and gas sector. It goes after other smaller companies as well that it can gobble up as long as they're successful enough and help it increase its footprint over the whole of the United States. It's aiming for some huge revenue growth, a Biden presidency and rejoining the Paris Climate Accords, and all of this focus shifting to renewables, electronic vehicles and whatever. This will make this company huge. Much like we saw with Plug Power, where its share price went through to $50 a share. That is absolutely enormous. There is a dilution coming up where the company is selling 10 million shares at $3.50 a share to raise 35 million in cash that it can then use for further asset acquisition. This could provide a really good buy opportunity before the company starts to really take it forward and the share price grow even further. The key thing is this money from the shares, the proceeds will be used to gain more assets, which obviously produce even more revenue, which is better for us in terms of PE ratio and P price to sales ratio. Thank you very much for watching, guys. I really hope you've enjoyed this episode today as much as I've enjoyed digging it out and searching it, and hopefully I'll see you in my next one. Catch you there.